Welcome, everybody. The Market Update Desk, December 18th, also known as Fed Day. Well, like many things with the Fed giveth and the Fed taketh away. What do I mean by that? So the Fed announced that they're dropping the Fed funds rate. That's the rate they lend banks on a night to night basis. That's not mortgage rates. So they dropped that 1/4% to 4.5%. Now that's a full 1 point drop this calendar year from where we were at the peak. And so that's great news. Now, one of the things the Fed referenced in their news release was they're still looking at considering the extent and the timing of additional adjustments. It's a very powerful statement that they came out with. Kind of going back through a couple of my notes here to the side. I apologize. Now, we did have a dissenter on the Fed vote. Believe it or not, it was not our good friend Michelle Bowman from San Francisco. Had a surprise today. We had a dissent from the Cleveland Fed president, Beth Hammack. She preferred to keep rates on hold. So that was a surprise. We wondered if it was going to be a unanimous decision, but we figured the dissenting vote would be coming from Michelle Bowman. Fed noted that the labor market conditions have generally eased and the employment rate has now ticked up. Now, what do I mean by the Fed taketh away? Let's talk about this. Now, one of the things, the big thing in this report is the dot plot or statement of economic projections, meaning where they see the terminal rate in 12 months and 24 months. We had been going into 2025 with an expectation of a 4-cut cycle with a 1% drop. What we got was a hawkish yield sign from the Fed that they lowered that projection to 2 cuts and only 0.5%. So a full 0.5% drop in the expected new terminal rate for 2025. That's a big deal. Also, in 2026, they took away one of the projected rate cuts. So very important things to follow there. So they're showing the terminal rate that the market is really looking at and businesses are looking at for long-term capital expense ticked up from what the expected was. That 2 rate cut takeaway is a very substantial impact. The markets are reacting as expected, negatively. 10-year bond is up as I'm looking right now, 4.4, 4.438. We're likely going to hit that 4.50 that we talked about yesterday. So these are big updates. I wanted to get those out to you. The other big numbers that came out today were new housing starts, permits, and completions. The big news there was that there was a reported 1.289 million unit pace for construction, down 23,000 from last month's number, which was also revised upwards. So we're getting some slowdown there. But the great news is the housing permits, which is the indicator of future supply, increased by approximately 86,000 to an expected 1.505 million. That goes into the statement that we've been seeing from builders of more confidence in the long term. And that has to do with carry cost for interest rates and the perceived idea that regulations will be eased a little bit on the construction and also the cost for materials. So that's a breakdown for today. We'll break this down probably more micro tomorrow. We'll look at it. The news just came out at 2 o'clock, and the Fed President Powell, or Chairman Powell, is going to give his Q&A at 2:30. So we'll make some notes. We'll cover that tomorrow. 616-293-2189, the Market Update Desk, your original singular market news source for West Michigan. Have a great day.